Welcome to the Making of Me podcast, where we explore the experience, decision that shape who we have become. Our today's guest is Simon Popple, an investor and educator focused on helping people understand how to invest in gold and right away. After starting his career in properties and finance, Simeon shifted his path when concerns about inflation led him to explore gold investing, now guiding others with a practical framework for building long-term financial security. It's really a pleasure and honor to have you on the show, Simeon.
Great to be here. Thank you very much.
Yeah, thank you so much. So, Simeon, take us back to your earlier career. What first drew you into property and finance?
Well, I think as a young person, you want to make money, and
Yeah,
property and investment banking have got a kind of certain cachet about them that as a young person you're kind of interested in. And I think that's what basically drew me into those sectors. And as I got older, um, don't get me wrong, I still like making money, but I think that you tend to look at you tend to look for the future and look at opportunities that are going to be there in 10, 20 years' time. And that's what led me to gold because, it's been around for thousands of years. So I've got no reason to believe it won't be important in the next 20 years or so.
amazing, amazing. Thank you so much for sharing. So, at what point did you begin to feel concerns about inflation and its impact on wealth?
Well, it's really when my parents retired, you kind of suddenly think, well, hang on, they've got to live off all the money that they've made. Um, it's it, my father was a successful lawyer, made good money, and you kind of think, okay, well, that's what their pension pot is. People are living a lot longer than they used to. Um, when you kind of look at the amount of money that people have, and they could live another 20, 30 years. You're only 60, and then you kind of do what's called a present value. Even if you multiply 10 years by 3% inflation, it brings your purchasing power down to about 77.4. So basically, 100,000 becomes 77,400. So you kind of think, I want to live more than 10 years. And if inflation is, 3%, that's bad enough. But I think it could be a lot higher than that. And
Yeah,
so if you live for, let's say, I don't know, 20 years and inflation's at 5%, that could just decimate your wealth. And although you can get investments that perhaps pay more than 5%, you're taking some significant risk on those, and therefore um, that kind of led me to gold because yes, of course, with gold you're taking a risk, but the average increase in the gold price since 2000, so that's over 25 years, the average annual increase is over 10.6%, which is well ahead of
mm,
inflation. So it led me to think, well, this is an asset class that I could invest in. Not only should it beat inflation, but it should beat it by quite a long way. So, I'd hope to uh, not just maintain my wealth, but actually increase it.
amazing, amazing. So, was there a moment where you realized most people didn't really understand how to invest in gold?
Yeah, I think that a lot of people, they go, I mean, there's lots of books around there and resources, why invest in gold. But what I do is I teach people how to invest in gold. The thing about gold is there's lots and lots of different ways you can invest. And a lot of people, they go, okay, well, I've got some gold jewelry, or I've got an ETF, or I've got a gold company. That's just one way of investing. And I think that to invest in the sector, you need to invest in lots of different ways because you want to sort of slightly hedge your bets. You don't want all your money in physical or jewelry or an ETF or whatever it is. You want to sort of diversify your investments across different types of gold platforms, for want of a better term. And so that's really what the gold system does. It shows people how they can build a portfolio of gold investments for the future where they don't have all their eggs in one basket.
Yeah, yeah, amazing, amazing. Thank you, Seth. It is really amazing. The fact that, yeah, diversification is very, very key even when it comes to that. Not just it's narrowing down to one stuff. Also, how did your background in valuation uh, and finance shape the way you approach gold today?
Yeah, that's a very good point because you kind of realize that valuing gold is incredibly difficult. And if you value properties, they tend to, look at a yield, which is the income you're getting from the property. Companies, you tend to look at discounted cash flow or EBITDA, all cash generation things. Gold, it doesn't actually generate any cash. So people tend to use comparables. So they say, well, this is gold price now, this is what it used to be. And they go, oh, it's really expensive or it's really cheap or whatever. But all they're doing is comparing it to a point in time, which makes valuation very difficult. And because of that, I think people find it very difficult to value, and therefore there is a chance that it is significantly undervalued. And if you look at what's happening in the world at the moment, all the geopolitical issues, economic issues, and debt and everything else, I think that could well be the case. And so I think it's attractive, not just in terms of a boring asset that you hope carries on delivering, but it could actually be a particularly good time to get involved in the market.
Yeah, amazing, amazing. Thank you, Sherry. So, why do you believe gold remain gold? Why do you believe that gold has remained relevant for thousands of years?
Well, gold, I think it's relevant because you can't print it. It arrived from outer space. Um, it's finite. It's, yes, you obviously exploration and producing and things like that, but you can't print it. You can't replicate it. You can't make it. A lot of people have tried to make it, and therefore it's got a limit on it in terms of how much you can produce. And I think the other thing I'd add is it's a global asset. If you look at a lot of other assets, they're property, a certain country, bonds, a certain currency, equities, they're more multinational because even though quite often it's listed in one country, the company will trade in lots of different countries. But gold is, you could take gold anywhere in the world and it's viewed as valuable. And the same can't be said for many other asset classes.
Yeah, amazing. Yeah, it's valuable across various nations, across various borders, just where you said that. Yeah, it has sustained time over time, and yeah, amazing. So, what are some of the misconceptions now people have about investing in gold?
I think people have a lot of misconceptions. One of them is people think you've got to be rich to invest in gold. You don't. You can, depending on where you're investing, if it's in the UK or US or somewhere else, you could probably spend $150 to $200 on getting a coin. You don't need much. If you pass a coin on to your children, I don't think there's a child that wouldn't say thank you for getting a gold coin off their parents. And so yeah, that's one misconception. The other is that you have to take physical delivery of gold. I've bought plenty of gold. I've never seen any of it. And you can get the dealer, or you can often get, you need to check with them first, but many dealers will actually store and insure it for you, so you never actually see it. Not only that, but it can be incredibly useful because you can actually buy some gold with the dealer and they can then sell it and put the money back into your bank account. So it can be quite a useful way of having a very liquid asset, which is kind of within sight but out of reach. So it's not in your bank account, so you're less likely to spend it, but you've got it outside the system, but accessible for a rainy day, should you need it.
Yeah, amazing, amazing. Thank you so much. So, how the emotion like fear and uncertainty influence how people think about money and investing?
Yeah, I think emotions are a very important point with any investment, and you have to be careful, particularly with gold and silver and other precious metals, because they're quite volatile. The prices can move up and down quite a lot, and because of that, I don't think it's a sensible investment for less than a year, because
Mm,
the price could fall and you find you have to sell, and you could sell at a loss. Yes, the price could go up and you can make a lot of money, but that's not really why you should invest. If you're going to invest, I'd say you need to be looking at least a year. And then my system, I kind of explain the framework for investing. And I think, there's certain assets which I think a year is fine. There's others where you probably want more like 2 years, and explorers, you probably want more like 3 years. So you do need to sort of match your investments to your time horizons, which is very important. Going back to emotions, uh, one of the important things really is to have a system, so you kind of back the system. And I wouldn't say it takes the emotion out of it, because you still get emotional with
yeah,
share price movements, but if it's all part of a system, then hopefully you get slightly less emotional about one particular part of the system.
yeah, amazing. Thank you so much for sharing. So, what does financial security means to you personally?
Well, I think that financial security is basically having money if you need it. And that's one of the things I like about gold because it's so liquid. I think, a lot of people, they make investments and, they're perfectly smart investments. They go, I want to buy this property, it's gone up 20%, whatever, which is great. If you need to, let's say the property is worth 200,000 and if you need £200,000 less mortgage cost, whatever it is, you can sell the property and happy days, you've got your money. But if you only need £10,000, you can't just sell the spare room. Uh, in a rising market, if property prices are going up, it could be great, it could be quite easy to sell. But in a falling market, because it's such a slow moving asset, you could perhaps agree to sell it for £200,000. But by the time you come to complete, it might only be worth £190,000. In which case, the buyer might turn around and say, well, actually, I don't want to pay 200, I want to pay 190. That's the market price.
Yeah.
You're kind of stuck because you're like either, well, I'll walk away, but you've got all the costs of the process of trying to sell it, or you sell it for 190 and you've lost 10,000. So I think that's one of the issues, not just about property, but about other private equity assets. You kind of want a level of liquidity that if you want your money, you want to be able to get it quickly. And that's one of the things I like about the gold system that I use because everything is listed. And I'd say physical gold is probably the most liquid, but if you've got listed shares and listed funds and things like that, they're also very liquid. You can sell them normally within 24, 48 hours and get the money in your account. Obviously, it depends what the settlement is, but I think T3 to T5 is quite common. You can get your money in the account within probably a week, certainly 2 weeks. So I think that's important to have some money working for you that hopefully be worth more tomorrow than it is today. But also to have the liquidity because no one knows what's around the corner, and if you need money quickly, it's nice to have it.
Yeah, amazing. I think this is really key being that when you're thinking about investments, so the liquidity should be something you have to kind of look for again, especially when it comes to, buying gold can be very lovely being that you can easily tell, turn it to cash compared to buying a property that's haggling, trying to kind of negotiate the price might take longer period of time and a whole lot of time. Yeah, the good thing about investment is the fact that, it keep growing and keep building up. Yeah, amazing. So lastly, Simeon, looking back, what key experience shaped the way you now think about wealth and long-term investing?
I think that you a lot of it is to do with your parents, I suppose. You kind of look at the situation that they're in, and you always want to be in a certainly not a worse situation, but ideally a better situation. And looking at them, their inflexibility, they cannot. Sure, if you're in your 60s, if you run out of money, you can probably get another job. When you're in your
Yeah,
80s, you can't.
yeah,
No one's going to employ mum and dad, and they're at a time in their lives where you've got care costs and other costs which are quite high, and you don't want to be in a situation where you run out of money. Because of that, I like gold because it's got form, and the price can go down obviously, but it has shown that over time it's performed well, and because it's done that for thousands of years, it's something which I'd kind of hang on to the future for, and hopefully it could look after me in my retirement.
yeah, amazing. Thank you so much. It's really a pleasure. Having you on the show and sharing your insight. So, Simon, from our audience, would love to reach out to you to inquire more about how the gold investments, or those who would love to connect with you, get to kind of read more about what you do. How can they reach out and where's the best platform?
The best thing to do is to look at the website, which is www.goldprogram.co.uk. So that's www.goldprogram. That's program.co.uk. What I suggest is have a look at that, and it tells you I've got a book that I've written which is less than the cost of a lunch. So if you just want to kind of put your toe in the water and find out a bit about investing in gold, you can get that. And then I've got a special offer on the system at the moment. So if it delivers less than, or two portfolios that I put together, if they deliver less than 10.6% over the next 12 months, you can get it for free. And then I've got a course and the gold program itself. But to be honest, for a novice investor, I'd suggest either getting the book or the system and starting there.
Yeah, amazing. Thank you so much. Thank you. Thank you. This is amazing, and it brings clarity. Thank you for bringing clarity to the topic. Many people think they understand, but often don't. What you just shared just speak volumes. I like the building of wealth. Isn't just about what you invest, but how you approach it with structures, long-term thinking. Yeah, it's really a pleasure and honor having you on the show, Simon.
Thank you very much. Really enjoyed it.